And if you look at the global cues, pretty flat coming in for the global markets. No doubt the US markets ended on positive footing. All three of the indices ended in the positive note. It was Nvidia that actually helped the rally for the markets. It was Alphabet that saw a sharp plunge in the trading session on back of its numbers. It disappointed the street. The AI spend was much more than anticipated, so that sort of left the investors pretty puzzled when you talk about Alphabet numbers. But on the whole, if you look at the US markets, the Dow logged in best session in about 2 weeks. You have the US trade gap that's highest since 2022. But back home, if you look at it, markets have been doing pretty well. We've been pretty range bound when you talk about the Indian markets. And talking about the way how the global markets have been panning out, Nikunj, nothing to be too perturbed about at this point in time, right?
See, there was a fear of a trade war for financial markets. But there is a realization that the trade war, when the actual changes would be implemented in terms of tariff, in terms of taxes, it would be a diluted version. That, in a sense, is having an impact on the way of financial markets are moving. So from Monday morning to Wednesday morning or Thursday morning, there seems to be a big departure, both in terms of the fear, and also there is a definitely an element of calmness which seems to be coming back. I look at one number to judge the near-term volatility, and that is CBOE VIX. CBOE VIX in last 2 days has got crushed, which clearly means that the US markets are no longer anxious about how things on the trade war or how on the tariff front would move. Dollar index, which had marched up firmly, 209, has now on your screen 107. So for an India bull, there is reason to get, I won't say excited, but there is reason to get bullish. Global cues are on your side. Dollar is moving as per the script. Global volatility has come down. And why just tariff war? I mean, the entire sell-off which happened in AI stocks and chip stocks, which happened because of the DeepSeek issue, and the fear was that it could lead to a domino effect in terms of where some of the hedge funds and the Nvidia holding would move, that also has settled down. So suddenly we are staring at a very predictable kind of a global landscape. We'll talk about India, but for me, the global landscape is looking better. It's looking calmer. It may be boring, but that is what you want.
All right, boring, but that is what you want global markets to be. It's looking resilient at this point in time, but back home, bulls are back in charge, because what we are seeing is that it's been the fourth week high hitting for Nifty, just what we have seen happening yesterday. But nevertheless, the closing was a bit in mild red, but the broader markets remained quite resilient in yesterday's trading session. There was indeed a lot of stock-specific action and a sector-specific action as well, because though on the index level, we did inch up, but it was the metal and the pharma pack. Those were leading it from the front. Other than that, the energy basket and even the public sector banks did gain for the second straight session. Other than that, the banking index was also seen to be hitting its 4-week high level. Just yesterday, we have seen very good move coming in on all these public sector banks per se, from the likes of Union Bank, Bank of India, etc. But today, of course, the eyes will be on SBI on the back of the earnings. We'll talk about that. But other than that, it was Nifty Realty that was seen to be hitting its 3-week high level, definitely rebounding from those lower levels. But after that budget announcement and the lot of excitement about the consumption story, the FMCG pack is once again believed to be that that was on the back foot. It was down for the third straight session. But Nikunj, how do you see the trade setup for the Indian markets right now? Because when we talk about the FII and DII positioning as well, there too we see that the FIIs did come out with the selling figure yet again.
See, what was risk has now become hope, and I'll explain it. The risk everyone thought for the market in the month of Jan was what will happen to trade war, how would the budget move, how earnings would move out, and what we should hear from RBI. What was risk? Now today is becoming a hope, because everybody is hoping that after the budget, RBI will do something different. So what was like a perceived challenge is now could be a trigger. So there is a very big change when you look at the market in that framework, right? The thing with markets is that the view can change. Nothing is permanent. If events change, your view changes. So are we at that turn where the view has changed? That's number one. Number two, what are benchmark indices doing? And is there good enough reason now for small cap stocks to stop falling? Let's look at first the Nifty setup. Yesterday's FI data made everyone excited, but no fall up there. So like they say, that one swallow is not summer always. So that is FI for you. They come, but they don't come. There is no pattern when it comes to the FI flows. So I will keep that FI picture aside. For me, what matters is that irrespective of FI, no FI, the event flow has been stitched up very smartly. Nifty seems to be making a base. And if we spend some more time here, courtesy global strength, courtesy what's happening in terms of the general market mood, then small and mid cap stocks will come back. Large cap stocks had fallen less. I won't call them oversold, but I think the desire to buy into large cap stocks or not sell large cap stocks is there. The way forward for next couple of days could be the following. I think there is a trade in banks today and tomorrow, at least in the run up to the MPC. There is hope, there is a view, and there is reason to get optimistic that Reserve Bank of India, in a sense, will ensure that what lead they've got from the budget, they could build on that. Because for the longest time, RBI has always argued about fiscal discipline. They've always argued about the health of the balance sheet. And I think on that front, India's balance sheet is decent. So I think there is a trade in banks and especially NBFCs. PSUs could be the tricky one. And I'm keeping banks aside here. Rest of the PSU stocks, because that's where you would say Janta has a lot of holding. And don't get me bad when I say Janta, I'm just talking about the retail crowd, I think, is heavily invested in PSU banks, or in PSU stocks. Could they see a rise on every uptick? And third, I would say Bharati numbers are crucial from a market standpoint, because whatever Bharati would do would be having an impact on Jio, and that will have an impact on Reliance. So for me, Bharati numbers are an indirect sign of where Reliance would move, and for Reliance to move, I think Bharati numbers would be a cue. So these are the 3-4 points which I would just like to bring out, that there's a trade in banks. PSUs minus banks could be a sell on every rise, because the average Joe is really heavily invested in them. Sabke paas hai, bhar bhar ke. And when a stock falls and when it recovers, you say, I'll cut my loss. That is what will happen. And Bharati numbers, I don't know why markets are not realizing that the best of the market share gain for Jio is over. But if Bharati is able to convince other way around, then because Jio has the second largest sum of part component in Reliance, only after retail business, it could have impact there. That's my sense.